India has historically been a nation where saving money is deeply ingrained in the culture. Families have typically prioritized stashing away a significant portion of their earning to ensure future financial securities. This tendency towards saving has been seen as a safeguard against economic uncertainties and a means of planning for future expenses such as education, weddings and retirement. However, recent data indicates a significant shift in this trend. According to a report by the Reserve Bank of India, India's net household savings have plummeted to a 47-year low. Specifically, in the 2023 financial year, these savings dropped to 5.3% of the country's GDP, which is a steep decline from the 7.3% recorded in 2022. This drastic reduction has sparked widespread concerns amongst the economists and policymakers alike, prompting debates about the underlying causes and potential long-term effects of this trend. Concurrently, there has been a sharp increase in household debt. Data reveals that annual household borrowings have escalated to a 5.8% of the GDP, marking the second highest level since the 1970s. This rise in debt is particularly significant because it illustrates a shift in how households are managing their finances. Increasingly, families are relying more on borrowed money to maintain their standard of living, which inherently diminishes their ability to save. A large portion of this growing household debt consists of non-mortgage loans, such as those for agriculture and small businesses, which account for more than half of the total debt. And interestingly, despite constituting a smaller fraction of the overall debt, borrowing for consumption purposes like credit card usage, purchases of consumer durables, funding for weddings, and covering health emergencies is the fastest growing segment. In 2022, the level of non-mortgage debt in India was comparable to that of Australia and Japan, and it exceeded that of several other major economies, including the United States and China. The implications of these changes are multifaceted. On one hand, the increase in borrowing and spending could be interpreted as a sign of optimism about the future, but on the other hand, many Indians seem confident that income growth will sustain or improve, which motivates their current spending habits. One of the economists in the financial services in India suggests that this trend might indicate a shift in the Indian mindset towards prioritizing immediate quality of life over long-term financial security. And on the other hand, there are concerns about the sustainability of the trend. Some experts argue that the reliance on debt to fuel consumption might lead to financial instability, especially if incomes do not grow as expected. Prolonged borrowing under such circumstances could increase the likelihood of loan defaults, particularly if economic conditions worsen. The Indian government, for its part, has downplayed fears related to the reduction in savings and increase in borrowings. Officials argue that the trend reflects a strategic use of low interest rates post-pandemic to invest in substantial assets like homes and cars. They view these behaviors not as a sign of distress but a demonstration of confidence in future employment and income prospects. However, some economists remain cautious. They voice their concerns that the current levels of debt and the corresponding decrease in savings could pose risk related to debt repayment and financial fragility. Similarly, other economists have highlighted the potential dangers of a growing dependence on borrowing in a country with one of the lowest per capita incomes amongst the G20 nations. He also notes that both the government and households are increasingly relying on borrowing, which could strain financial resources and increase borrowing costs over time. In conclusion, while some view the shift towards higher debt and lower saving as a temporary adjustment or an indication of economic confidence, others worry about its long-term implications. As India continues to navigate these economic changes, it remains to be seen how this balance between aspirations and economic realities will play out in the coming years.